Yeah, so yeah, let's talk about SAR. So as I
Yeah.
said today, like this one is a that is against my filters. So because of wedge, so I ignore this one, and then it becomes, a breakout in the opposite direction. The issue with the SAR is just the timing. How it's just I mean it's complicated to execute in practice because you're not sure whether your signals really fail.
Yeah.
So I
I
just
mean,
want to know the timing and the entry point for SAR.
do you want me to share my screen and we can do the
Yes, yes, of
whiteboard?
course. Of course.
All right. So we are all developing systems around high probability signals. And, the first principle is okay. So this is why stop and reverse works. But like you said, there's often ambiguity around the threshold at which you should stop and reverse. So this is where each signal will have different thresholds. So like you would have a different threshold for a channel, your channel reversals stop and reverse, versus your breakout and follow throughs stop and reverse. I think your channel reversals stop and reverse would likely have clearer threshold because it would be a breakout against the channel and likely a move, the in the opposite direction. So an actual reversal starting a new leg
Yes,
in the opposite direction.
yes, definitely.
But
Because
um,
yes, I mean as Al said, like a 75% chance like a channel, well, 75% chance a bull channel is a bear flag
right,
and a bear channel is a bull flag. So it's after three or four legs, moving in the same direction, and if the channel is showing weaknesses, then that is that might be the starting point. The start to consider stop and reverse if you see a signal like late in the channel cycle.
yeah. So signals. These will vary based on the signal. So if you get a 4cc against you, a 4cc reversal against your signal, that's for me, that is an immediate cut of my position. I don't try to even work at break even because often that means that you're getting one of those sneaky reversals that don't look like a reversal until you get the big breakout against you. Uh,
Yeah, for that, I'll show you something later.
okay, perfect. So 4cc reversal is immediately cut position. And this does not even require having closes against you. Like your position could still be in profit. So if you had a big breakout bar, and let's say we're trading your system way, and
Yes.
you open here, get the 50% pullback, and it becomes a minor breakout that doesn't get to the measured move target. So these are both bear bars. And then you get here bull, 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 bull. So even if you had entered here, even if this is your entry, and this is still you're still in profit. If I had four bull bars against me, I would immediately close the position because this is the idea is that you're in a, especially for your signal, the idea is that you're in a channel, right? And this kind of move does not happen. You don't get four closes against you if you're trading for these kinds of immediate continuation signals. So this would be a reason to at least cut the position, if not stop and reverse. Um, for a lot of the signals that I trade, if I have two closes against the signal and or they are two closes against the signal and it has reached my stop. So if it, let's say I'm trading, we have I'll just write this one first. So CC against and no pullback to measured move. So this is if you have, so if I were trading, like one of my versions of your signal is a trading range pullback signal. So if I had, say, if this were a bear bar again, following a weak bull bar. So if this were my signal bar, if I sold above it, and so if this opens here, gets a wick above, and I enter here. So bull bar, selling above this bear bar, and closes here. If then the next two bars, and this, so my stop is at least one measured move. So if I get one close, two closes against the position without any pullbacks, and two consecutive closes against the position, and it reaches the measured move target, then I will stop and reverse. This is a stop and reverse setup.
Okay, that's the point. That's the point where you would do the yeah.
And you
Yes.
can, there are some scenarios with some of the signals that I trade where you would have, in theory, you could scale in here, expecting that you would be able to retest this breakout point. But if this is expanding momentum, like I intentionally drew a tick gap here, and a tick gap here. If you have tick gaps, they're closing on their highs, then this is likely not going to get back here. And so this is your other SAR. The main idea, though, is that you are expressing the change in bias when that low probability event has now the higher probability, and you're trading in the direction of increasing momentum. If
Yes.
there is not increasing momentum, then typically you don't want to SAR yet. You can typically manage your position for closer to a break even exit. It's when you see momentum, and momentum can be here in terms of price control,
Yes.
or in terms of I'm sorry, time control, or here in terms of price control.